I woke up this morning to my account being down $4,000, not even caring. I'm like, I don't got time for this today. I'm going to go do some work. And then I'm getting all these comments in our WhatsApp groups about what is going on with the Canadian banks, because Canadian Imperial Bank today, if you went on CIBC, guys, is down 50%. Like, this is giving me flashbacks to like the Wells Fargo crash that happened here, guys. But then I realized, they're doing a stock split, guys. A 2-for-1 stock split is happening right now, and it is unbelievably confusing because in my actual like trading account app, it's saying that, oh, Canadian Imperial Bank is green today. It's actually going up. And I'm like, why am I down $4,000? Right? Well, it's because the shares haven't hit my account yet. So if you hold Canadian Imperial Bank, be patient. We haven't had earnings. Nothing's come out yet. This isn't news related. It's just purely, not only are we getting a stock split, but we are getting one extra share if you were a shareholder before May 13th, which is, I guess, pretty great. A little bit of dilution going on, but nonetheless, the stock is doing just fine. We just needed to update in the account. And looking at the markets overall today, guys, woo! After that green Friday we had, what a great start to the week. I mean, this is like the most real green I've seen in a little while. All the Canadian stocks have been coming back very nicely. All of my stocks are relatively on the green today, which is beautiful. A lot of the tech stocks coming back outside of Tesla, which I don't hold any of these tech stocks anymore. I'm going to discuss that in a quick second here, guys. But Tesla, Shopify still getting clobbered today. But yeah, generally, all in all, pretty nice day if you're not holding a lot of the speculative stuff, because obviously a lot of the small cap spec still trading down today here. But I want to take a moment here and talk more broadly about what I'm seeing in the investing community, because all the day traders I used to watch, that I've watched for years since the beginning of my channel, guys, a lot of them have gone and got real jobs, got involved with real estate. These were people that were preaching that, you can sit at home, make passive income, make $100 worth of days, depending on how much 10, 20, 30,000 you're playing with. And all of them have largely bled off. And I find that rather fascinating here. And that is just one segment. I also want to just briefly read this article because this takes us back to 2019, which you might recall was a fabulous year. And this says, last year, the S&P 500 index, the benchmark for U.S. large cap stocks, posted an absolute return of 31.5%. This was the index's second highest annual return since 2001 and its fourth highest annual gain in 30 years. And this doesn't even replicate close to how good of a year coming out of that 2020 crash was. But mid caps and small cap stocks also had strong years. The S&P mid cap 400 index surged 26.2%. And the crazy thing is with 2019 being a remarkable year for equities, active fund managers posted excellent absolute returns, yet the majority were still unable to beat their benchmarks. Among all domestic equity funds, 70% lagged the S&P 500, 1,500 making it the fourth worst performance since 2001, according to the S&P indices versus active scorecards, right? So I find this really intriguing, and I just wanted to bring this up as an anecdote because I always listen to a lot of people out there, again, people like me, Kevin, Jeremy from Financial Education, and Jeremy keeps reiterating quotes that I used to say a lot too, which was things like Facebook's easy money. Facebook's probably the easiest money over the next 5 years. The thing was, is we were saying that through Facebook's great growth cycle, and clearly in the midterm here, or even over the last couple of years, Facebook hasn't really been the easiest money, right? Right now, Facebook on a 5-year basis is only up 36%, which, by the way, I think it is a great buying opportunity down here. I'm just going to use this as an anecdote, but it's the same thing with PayPal, right? Like PayPal, easiest money in the world. It's growing platform, all this great stuff, yet it's only up 58.7% over the last 5 years. Netflix, another one of these incredible companies, people have tried to buy to outperform the basic indices and has only offered a 20% return over the last 5 years, whereas the S&P 500, though it is down 15% roughly year to date, or roughly over since the all-time high, it's still up 68.76%, not including the dividend. If you reinvested that dividend, guys, you'd be sitting over closer to an 85% return over the last 5 years, which largely even the best investor of our entire generations, actually. Buffett's been around for a very long time, guys, and even over the last 5 years, people are saying, oh, he's having a new heyday, but he's really not outperforming the S&P by that kind of leaps and bounds. It's really only up an extra 10% maybe at the most over the S&P 500 index. And the reason I'm showing you this stuff, guys, is because this market has become so unpredictable, and I have recognized the luck that I've had in this booming bull market is luck. It isn't one of these things where you can just sit there and DD your way to $1 million. And to give you a full example here, guys, of why I become so passive in the last little while is when I take a look at the performance of my entire portfolios, not including my corporate account, which again has only been in existence for like a year, I have largely outperformed every major indice, all the ARK Innovation ETFs, any fund manager that I know, all the day traders that I know, all of the YouTubers that I know. And this isn't as some form of a brag. This is just me recognizing the insane amount of luck that I've had. I mean, with stocks that I bought, that I sold, that I said were long-term holds, that a lot of people were still holding to this moment, have not seen those kind of returns because I took profit, I got out, and I diversified. And I've come to realize that with this kind of luck, guys, that a large portion of the funds that I've been able to grow should be in those indexes, because I do not want to wipe out the generational amount of work that I've done with my portfolio that will easily take me into retirement if I don't mess things up. And it is really, really easy to mess things up. I mean, you could have picked, if you picked the most unluckiest large caps, and that's pretty much all of them at this point, Tesla at all-time highs, PayPal, Netflix, Facebook, it would really only take 3 or 4 of these companies to drastically, basically do what they've done to wipe out everything that I've worked so hard for if I was more aggressive like many of these YouTubers are. And this conservative nature coming out of me also has a lot to do with watching my parents move into retirement during a phase of extreme market volatility, making me see, you know, how challenging it is if you were retiring today, where are you going to put that money where you're going to be reliant on it for the rest of your life, knowing that you're probably not going to be adding a lot more capital into the future to that portfolio. And like I said, it's just super entertaining to me specifically to see how hard of a challenge that truly is when you've watched so many come and go over the last several years, so many that cannot state what I've stated in this video, because again, it doesn't take a whole lot of stupid decisions or even what you think are good decisions done with DD for the market to just turn on that stock. And again, you get reminded of things like Cisco and Micron and these companies where you can be as hopeful as you want, do all the DD you want, but that doesn't guarantee, even with good numbers, that those stocks are going to rebound back to the highs that they've seen. I mean, we've truly started to see bubbles bursting in many of these speculative markets with crypto, with small caps, and it has really led me to kind of shrivel back up here and realize I'm not as smart as I'm trying to portray myself to be. I am just like you. I am just trying to figure this out as I move forward here, and I really want to pass the question off to you guys. How do you framework your portfolio? Because I've come to realize that even pure dividend investing doesn't always lead to the best results, and it's not always about outperforming the S&P 500, but when you're taking on the due diligence and the work involved to buy individual companies, the idea is to outperform the benchmarks. And over a 30-year period, as I've stated, less than 1% of fund managers will actually outperform the basic indexes, guys. And like I said, it's kind of a boring discussion to be like, oh, well, just buy index funds. But I think it's a really relevant discussion today that would save a lot of headache and stress and a lot of people thinking that, oh, just because you've done the DD, it's going to work. But I really want to know, how have you guys been handling this market? I noticed a lot of people shifting to indexes, a lot of people changing strategies up. A lot of people are actually doubling down on their strategies, like Jeremy from Financial Education. Instead of kind of getting weak hands and losing his cojones like I have, he's really doubling down on this market. And I think it's a real intriguing thing to watch unfold in real time, to see these people that you should take an appreciation that they're offering you the privilege to see inside of their investing lifestyle and to see how it pans out over the long term, because that's something that didn't exist 7 years ago when I got involved in the stock market. But again, I would love to know how you're panning through this market. Hopefully you are buying these dips, because, you know, people like to buy the tops, but when it starts to bottom out, they realize, oh, I don't want to be buying this right now. I want to stack cash. But it's like, well, this is the opportunity. I mean, why are you stacking cash so aggressively when this is where you should unload the cash, right? But it's just my personal opinion. But again, I want to know what you think in that comment section. Stay cool, stay awesome. And as always, I look forward to catching you in the next one.